American Express stock, ticker symbol AXP. This stock is up 15% on the 1-year chart, underperforming the S&P 500. However, most recently the stock is going up big time. On the 26th of January, AXP presented quarterly earnings with a miss on both the EPS and revenue. For the upcoming earnings, almost all analysts expect a beat, potentially pushing this stock up. More on that later in this video. And people love AXP stock because of multiple reasons, and one of the main things being the dividend growth. And I understand why, with dividend yield at 1.19% and the 5-year growth rate at 10%. They also did a recent increase of 16.7%, which is a great number of course. And if we look at the total returns in the past 5 years, we see that AXP stock outperforms the S&P 500. So could this be the perfect time to buy AXP stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does AXP do? American Express is a global financial institution operating in about 130 countries that provides consumers and business charge and credit card payment products. The company also operates a highly profitable merchant payment network. In addition to payment products, the company's commercial business offers expense management tools, consulting services and business loans. And when we dive in the earnings report, we see that total revenue was reported at 15.79 billion, up 11% year over year. And this is a great increase in my opinion. On the full year numbers, the revenue increased 14%, so it's coming down a little bit, so that's something to keep in mind. Net income was reported at 1.93 billion, up 23% year over year. And I think this is one of the best things in this overview. Margins are increasing at a higher pace now. EPS is up 27% because of the increase in net income and the share buyback of 3%. To me, this looks really good. In here we see that total network volume is increasing at a decent pace over a longer period of time. However, growth is slowing down a little bit, so that's something to keep in mind. And here we see the US consumer services divided per target audience. Millennials and Gen Z are up 15% year over year. They represent 32% of the total. The biggest segment, Gen X, represents 37% and is up only 6%. And the smallest segment, baby boomers, is up only 2% year over year. The commercial segment is hardly moving, with the smaller and medium-sized enterprises up only 1% and representing 83% of this segment. The international card services is doing pretty great with a 30% increase year over year. Expenses are a little bit more in control now, with only 5% increase year over year in the most recent quarter, while the full year is looking at a 10% increase. To me, this looks pretty good. For 2024, AXP expects a 9 to 11% revenue growth and EPS to be in a range of $12.65 to $13.15, resulting in a 30 to 70% increase year over year. To me, this looks pretty good. For the long term, they expect revenue to increase at 10% and EPS to grow at mid-teens. Again, looking really good to me. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. AXP stock is a 146 billion market cap company. PE ratio is at 18, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for AXP stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on AXP. And I'm also interested to hear your thoughts in general on this company. Revenue is at 58 billion, and in this graph we see that revenue went up in the long run. However, it had a major setback during the lockdown periods. From there, they recovered pretty steady. Margins are going up and down over a longer period of time. Most recently, they started to increase again, which was much needed in my opinion. Definitely keep an eye on this number. EPS is looking pretty similar to the revenue and the margin. After the lockdown periods, it started to increase again, but still keep an eye on this number. Analysts expect that from here EPS will grow at a pretty high rate in 2024 and 2025. From there, it increases only a tiny bit. For the revenue, analysts expect pretty much the same pattern, but at lower numbers. Both are not really in line with company expectations. Return on assets is sitting at 4.8%, which is a low number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 2.8%, which is really disappointing to be honest, especially since it is significantly lower versus the 5-year average. Current ratio is at 1.75, which is a decent number. Nothing really special to mention here to be honest. Right now, AXP has 49 billion in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. AXP has 47 billion in total cash, so they can pay down almost all of their debt, which is pretty impressive. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.19%, which is a decent number. Annual payout is at $2.4 and payout ratio is at 21%. I prefer 50% or lower, so right now they have 79% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 10%, which is a great number. They have increased the dividends for 2 years in a row, which is of course a little bit low. But if you take a look at these numbers, the dividends paid since 2012, you see that AXP did increase the dividends at a high pace. However, in 2021 they didn't increase the dividend, ending a really long streak. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is at a healthy range. Of course, we also see the impact during the lockdown periods. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a slightly higher rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare AXP stock with the overall market, in this case the S&P 500. Next to that I added Visa and MasterCard. On the 5-year chart we see that AXP beats the S&P 500 and Visa. However, MasterCard has the highest return here, and this is including dividends. What's also interesting is the fact that the S&P 500 had the lowest return here. On the 1-year chart things look pretty interesting. AXP had the highest return with 31%, while all the others are hovering around the 20% return. This also has to do with the recent earnings release. On the 6-month chart it is AXP beating the others in this list, and again the S&P 500 had the lowest return here. On the 1-month chart it is again AXP that is having the highest return, but we also see the impact of the most recent earnings report. And bottom line, AXP beats the S&P 500 in the long run, but also in the short run. So could this be the perfect time to buy AXP stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 13, 14 and 15%. For the free cash flow margin I'm putting in 24, 25 and 26%. For the PE ratio I'm putting in 18, 19 and 20. For the price to free cash flow I'm putting in 8, 9 and 10. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now AXP stock is around $200. I hit analyze and we see a lot of green numbers. We have a low price target of $173 to $214. We have a mid price target of $223 to $266. And we have a high price target of $287 to $333. And to me the mid price target is the most justified here, meaning the stock is undervalued according to these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on AXP stock is that the stock looks undervalued. I've been following this company for quite some time now and it seems that they keep delivering good results, especially in terms of growth. Most fundamentals look pretty good and the fact that they can pay down almost all their debt comforts me a lot. They have a lot of cash on hand. The revenue growth is also something that I really like. And the fact that margins are increasing again comforts me a lot. This was one of my previous concerns. From a dividend point of view, things also look really good, especially after the most recent increase of almost 17%. From a value point of view, I also get really excited. I do think they are undervalued, but there is really an important note here. A big component of this price target is based on the revenue growth, meaning they should be growing at a high pace, which I believe they can do of course. However, this is something you want to keep your eye on. For now I'm putting them on my buy list, next to some other stocks. Whenever the moment feels right or there is a decent drop in stock price, I will buy AXP stock. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.